What's up, guys? Welcome back to another video. Today I want to do a trade breakdown. Okay, so I've been talking about this new strategy that I'm creating. It's been going really well. I've been pulling some pieces from here and there from other YouTubers, other strategies that I saw, and I'm trying to mend it into something that I'm really comfortable with. And I think we're really hitting something on the head here that's really strong and really efficient. So this is an 80+% win rate. I already talked about this in my other video too, right? 80+% win rate. We're always shooting for a little bit higher than a 1-to-1, 1-to-1.5 risk to reward ratio. So you're getting a lot more than you're betting, and you have a super high win rate. So, the profitability is definitely there. The thing is that this is like scalp trading, right? You're trying to take quick positions. You're in and out in maybe 15, 20 minutes. You're not holding it over the next couple of days. So I'm going to go through a trade breakdown of what I did today and how I secured a 1-to-1.84 risk to reward ratio on USD JPY. And I'm just going to go through my thought process and show you guys what I was thinking. All right, so we can see that actually the market completely boomed. I'm somewhat a little upset I didn't hold my take profit. I should have just let my take profit run, and you can see it would have been over a 1-to-6, would have been over a 1-to-7 risk to reward ratio if you just let this run. So there is a lot of potential here for just having an open take profit and letting the trade run for an extra half hour to an hour, and you can probably secure those 1-to-4s, 1-to-5s, and maybe even something like this, like 1-to-6, 7, almost 8, right? So it's very strong. Obviously, that's not consistently, right? Like this is the, couple times I've seen it happen like this, but we just have to be a little bit more patient. I'm always shooting for the smaller wins, right? The 1-to-1s, 1-to-1.5s, 1-to-1.25s. Those are what I'm kind of looking for. So let me bring this back into replay mode before the market opened up for Asia session. And let me show you what I was thinking initially. So here we are. It is 7:40. I'm sitting down at my computer. Okay, I always sit down maybe about 15-20 minutes before the Asia session opens, for at least from my time, right? 8 p.m. is when the Asia session opens on my time, on Eastern time. So I'm sitting in front of my computer and I'm trying to analyze the market. I'm like, okay, where's the market going? What are we showing? What are we being shown? And where do I think we might have a positional play here? So the first, let me go back, I'm skipping way too much. The first couple of minutes, we can see that market is slowly developing into a bearish market structure on the 5-minute time frame, and on the 15-minute time frame as well, right? We can see it's making lower lows, lower highs. We're going bearish. We're respecting these highs up here as well, right? We have a strong area of interest that we're pushing down from. So my first initial thought was, okay, today's going to be a short position. We're going to look for a short, some type of sell, right? We're going to try to find some supply to sell off of, maybe a smaller time frame area of interest, and that's when we see this area of interest start to form, right? So we have a little bit of resistance, support here. I would have probably had it a little bit more up here, right? So that's where I was thinking in my head. This area is a strong area to sell off of, so maybe we have potential of a sell position here. So I drew my fib sequence like I always tell you guys, right, from the bottom to the top, and then I had an entry position potentially right here. This is where I was first thinking about having an entry, and then take profit would have been, I don't know, whatever it would have been, maybe 1-to-1, 1-to-1.5, somewhere down here. I think respecting these lows is what I wanted to shoot for. So this was initially of what I thought was going to happen, right? But again, we don't draw our fib sequence until we are done with the push. So we can see here that this 5-minute candlestick actually closed really bearish, right? We don't even have a lower wick here on this 5-minute candlestick. So very strong bearish momentum here, which is good if we're looking for shorts, but we also don't want it to push so far down where there's no possibility for retracement into our position. So we can see the next 5-minute candlestick, we start to find a retracement. So again, I adjust my fib sequence. I'm taking you as I go along, right? So this is like, as time is going along, I'm making small adjustments on what I think is a higher probability. So it's not just instantly, I set my Fibonacci sequence for this time and I'm just going to forget about it for the next half hour. Because no, this can continue downwards and then we lose functionality of our fib sequence, and if it comes back and retraces, then we don't want to be in the position because we're not at a strong fib level, we're not at a strong area of interest anymore. So like there's things that can change when you're scalp trading, so you have to be very consistent and be in front of the markets and analyze it well. Okay, so this is what I was thinking. I think this looks honestly like a really good position now. I'm like, okay, cool, we made a very strong bearish push downwards, we are breaking this area of interest, we're coming back, retracing for a retest at this area of interest, and hopefully going to see a strong push downwards. And this exactly happened, okay? But we didn't get entered in fast enough, right? We can see that if you check my Instagram, I talked about how my entry position would have been right here. Stop loss would have been right around here. So our stop loss is above our high. Our entry position is at our area of interest, but we did not get into the position, unfortunately. Okay, this would have been super fast of a trade too. Would have been amazing to see because we would have tapped into it and then instantly sell off into our profit after like 3-4 minutes. So those are the trades that we want to see, especially at the Asia market open, right? We can see how much volume gets pumped into the market the moment Asia session opens on USD JPY. So that was kind of unfortunate to see, but I knew we still had some potential left. Now we wait a couple more minutes. I'm thinking what might happen. This is the market structure we are at, right? At this point, I'm not in any trade. I'm not interested in sells anymore. This area of interest is still somewhat valid, but I'm not really looking at sells anymore. I'm looking at buys. Now I'm like, now is a good opportunity for buys. And you may ask, why did I switch from sell positions to buy positions? And the main reason was this 15-minute candlestick, okay? This is a very strong 15-minute bullish candlestick, right? It's not exactly a bullish candlestick because a cleaner bullish one would have been something like this, right? Where we have almost no upper wick, but we are at a very, how do I say this? Like we have a very strong rejection from lower prices. We can see the 15-minute created such a big lower candle wick that it's just rejecting all those lower prices, looking like it's going to head to the upside. At the same time, I'm thinking to myself, this can be a really good buy position because now we are at this lower low point. And what do we know when we are in a bearish market and we're making lower highs, lower lows, lower highs, lower lows? If we're at a lower low, we have a very strong potential to come back and create a lower high, right? So we still have a lot of bullish market structure that we can develop, and potentially we can catch a trade, something like this, right? This is what I'm thinking. It's almost like a counter trend trade, if you can think of it like that. So that's what was going on in my head, right? That's a huge 15-minute rejection candle. 5-minute is already engulfing previous market structure as well. So now 5-minute is technically bullish because we have, nice little break of market structure heading to the upside. This is where I draw my second fib sequence. I delete this fib sequence. I'm no longer interested in sells. Now I'm looking for buys. So just as usual, like I tell in my Fibonacci video, right? We go from the bottom of the push to the top of the push. We have our entry position right around the 0.618 zone, right? There's a very strong area of interest there because, Fibonacci, this is a very, I don't know exactly the mathematics behind it, but the 0.618 zone and the 0.5 zone, very strong areas on where you can have a buy position, or a sell position. So that's basically it, right? We enter the position here. We start to reject off of prices pretty well. I'm thinking everything's going well here, but we do start to see a lot of bearish momentum too. But this is the thing. We are not changing our position at all, right? So we entered in our position. We had our buy limit. And now we're not touching anything. We're not touching the charts. We're not touching our stop loss. We're not touching our take profit. We're not readjusting. We're not doing this. We're not adding more position. We're not removing half of our position when we're in profit. Like, we're just letting it run. That's the key. Just let the charts run. It is way easier to do your analytics. It's way easier to understand your own strategy. It's just way easier on your psychology, especially with these easy trades where they're quick in a scalp trade. If you have a losing trade for the day, just forget about it, be done, go to the next day. Right? It happens. If you have a winning trade for the day, why are you still trading? You just won a trade and you made 1 to 1.5 on your money. Take that and run, wait until tomorrow to trade again, right? Don't overtrade. You don't have to be in front of the computer for 4 hours trying to trade. So I'm in the position, right? And of course, I'm not feeling the greatest right now because I'm like, I see a huge bearish candlestick. I'm thinking it might engulf, which it does. We head downside pretty far, but I'm not worried still, right? I'm not worried, even though we are in the in loss here. Technically, I have my stop loss way down here. I know we are well protected. We still have a good amount of room before heading to the upside potentially, so I'm not worried about it at all. At the same time, I also really like how we're creating, I don't know what the exact terminology is, because I never really trade it, but essentially it's like this, it's like a downward trending line, right? It's like a downwards trend, right? So we can see here that we had a very nice 1 minute break of structure to the upside as well. And now we're slowly in this little trend, downward trend. And we always know that this potentially has a very strong probability of breaking out to the upside. So, that was pretty nice to see as well. So I really wasn't worried about how price was pushing downwards. And we just continue on. We could see price is still pushing downwards, and we just completely explode to the upside. Absolutely amazing. At this point, I had my take profit at 153,283, or maybe it was 282 or 283. I forgot exactly what the number was, but it was right here. We were shooting for a 1.63 initially, and I saw this reaction, and I see we're continuing pushing bullish upwards. Very, very strong bullish momentum. So in my mind, I'm like, okay, we can secure actually even more profits, right? We're breaking above this 1 minute EMA. We're breaking above this 5 minute EMA. So I actually moved my take profit an extra pip above to the 1.292, right? So now my take profit is there, and we just simply set and forget a little bit more, right? We did see a little bit of consolidation, but not too worried. And then we just snipe our take profit. So I was considering, I have to do a little bit more analytics on the strategy, right? Because I've noticed that some of these trades honestly have such strong potential to reach a 1 to 4, 1 to 5. So I was really, really heavily considering removing my take profit and just letting the trade run for maybe an extra 15, 20 minutes just to see where it might go. And we can see if I did leave it for an extra 15, 20 minutes, we would have almost doubled all our profits, added an extra, we would have been at a 1 to 3 here. If I left it even more, we could have been all the way up here, 1 to 4, 1 to 5. So, we're really shooting for big profits here, but, that's not the point of the strategy. We're not trying to chase massive wins. So that's basically it. This was a really good trade, a really good test on my psychology, because I knew we had a lot of bearish momentum here too, and I started doubting it, but just simply set and forget it, especially with the scalp trading. If it's a loss, it's a loss. You go on for the next day. If it's a winning trade, take your profits and run, and then wait for the next day to happen again. So really good trade overall. And, I hope you guys learned a little something here. This is how I'm starting to adjust my positions and adjust my reading of the markets as it's going on. Exactly. When you're swing trading, it might be a little bit more difficult because you're waiting for 2, 3, 4, 5 hours of market structure to develop for you to know if you're going to enter a position or not. And then you have to hold that position for maybe 2 or 3 days. And which is good. You could have definitely a strong win rate, a really good strategy with swing trading. And it definitely worked for me for a bit, but I'm taking a somewhat of a little break from swing trading just because it was hurting my psychology. Holding those positions for a few days at a time is really difficult. So I'm definitely really, really interested in this new strategy I'm developing, going really, really well. And let's continue to see how it goes over the next maybe 2-3 weeks, and gain a little bit more statistics, do a little bit more analysis, get a really accurate win-loss ratio, get a really accurate profit and loss ratio on what the risk to reward is going to be or what it can be. So let's just continue to hold out, and that's basically it for this video. Thank you guys so much for watching. I really appreciate you staying all the way to the end. I hope you guys learned something. I know I did. I'm still still figuring out a couple things with this new strategy, and I'm still adding in pieces here, seeing what works best, how I can improve it to make it even better. But I'm really into this like 80% win rate kind of strategy where we win a very high majority of the time, even if the wins aren't big. We don't have to shoot for 1 to 5 risk to reward ratios every single time. I'm way more than happy to shoot for 1 to 1.5s, 1 to 1s, and just have a higher win rate. You know, it's way better on your psychology. And if you do end up in a losing streak for maybe 2-3 days, you can break out of it super easily. So I'm very interested in pursuing this a little bit more, going more in depth, seeing what I can create out of this. But I wanted to give you a nice trade breakdown on showing you a really good trade and also how I manage the trade throughout the time that, you know, the market was developing its structure. So thank you guys so much for watching. I really appreciate it, and I will see you guys in the next video. Peace.